Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 14th of June, 2018. All right, my friends, in looking at the markets, the surprise of the day that picked up the gold and the silver was the euro. The European Central Bank extended their QE program. Yes, they're only going to buy half the amount they did from September forward until January. However, they also surprised the market by saying they're not going to raise interest rates until the summer of next year. You heard me, the summer of next year. That took the euro from 119.39 down to 116.42.5. It in turn created chaos in the market, giving gold a bid, silver a bid, even with the dollar rising rather dramatically, a full penny today. Very, very unusual day. Yes, there's the news about ex-FBI Director Comey. Yes, we have the news in the market that President Trump might issue tariffs as early tomorrow. The list of them on China, it appears he's going to go ahead with it for another $50 billion, which will start trade wars. And the EU today passed retaliatory measures. I think come the first of the month, they're ready to move on us. So it's pretty crazy out there what's going on. But when you look at the weekly chart of closes, you can see how the market has gone down and getting a little bounce. It is still not back over that 18-week average of closes, which means the thrust of the market, as I define it, is still basically to the downside. When we look at the sideways action, the big question is this the breakout? I mentioned yesterday I thought the metals were ready to break out to the upside. I was disturbed today because when you see the Bollinger Bands, you stopped right at them and you pulled back. That is not what I wanted to see in the gold market. In the gold, you have a pattern of a lower low and a higher high. But coming out of sideways action, that's not uncommon in the market. Are you over the 18-day average? Yes, you are. So you've gotten over it, so the bias has turned back up. But this is what bothered me. 13.1080 is the upper Bollinger Band. You got to 13.13 and you got thrown back within it. One day doesn't mean it's going to stop, but the way I look at the markets, the way I teach charting, the first challenge of Bollinger Bands, be it to the upside or downside, is often where professionals step into the market and get out of it. If they're long, out of longs. If they're short, against the lower number. That's what I teach and that's what I believe. When I look at momentum, momentum has turned up. The bias is up. You're not trending because you got a higher high and a lower low. Are you going to come out of this sideways action? If you do and you start up from here, the next number that I have as resistance on the chart is the 100-day average at 13.32. When we come, and let's see if I can get this to load up for us. This is GLD. I'm going to hit Alt-L. That'll get us going. There we go. As you can see here, lower low, higher high. Where did this market start? Stop, rather. You take a look. The upper Bollinger Band's 123.66. You got to 123.86. You pulled back from it. So just like the futures, you backed off here. And when we come to the GDX, let's see if I can get that. There we go. I should have loaded these before I began, but only the stock ones take a moment. You can see how the market went to its upper Bollinger Band and stopped. What's common here? All have sideways action, and they're challenging their Bollinger Bands. That's all that I can say about them. I cannot say that there are breakouts in any of the gold markets. The gold-silver ratio, I feel good about. I stuck my neck out on Fox back here in April, and I said, I think we are at a historic number. Watch out. I think this market's not going to keep going, and it hasn't kept going. In fact, if anything, it turned the other way, so I feel pretty good about that. In the silver, you are up and over the upper Bollinger Band. I consider this a breakout chart. So this one is in the breakout. Pullbacks in the market. We'll see what happens. Do you recall we were talking, if you go to my other videos, how often you kept hitting this gray line, which is the 200-day average? It goes all the way back here. And I kept saying to you, I said, eventually you knock on that wall enough times, you might pop through it. So I'm going to look at this whole area down to these numbers right here until they're taken out. And I'm going back here into the 1630s, 1620 area. I think this market is broken out to the upside. The question is, where does it go? In the copper market, because of the potential tariff war between China, the U.S., that appears going to be right back on the table again, us, the EU, us, Canada, us, Mexico. This rally in copper, I'm questioning if it can hold without getting back and challenging this area right through here, the 18 and the 100-day average of closes. As a chart technician, I've got a lower low, a higher high, a market that is overbought, starting to point down with momentum maybe carrying it to that number. In the platinum market, look at how narrow the Bollinger Bands have gotten, and I have been telling you, there's been no follow-through to the up or downside. I've got to see if the market can break out to the upside, but each time we've gotten to the lower bands, we've faltered, and to the upper band. So I want to see what the market does. I'm not prepared to say, like in silver, that that market has broken out. And in the palladium, I said it's weaker than the platinum, and you can see that it has been so far. It is still in a corrective mode. It is still overbought as I read the chart. Last, the dollar index. Did it get ahead of itself today by getting over the upper Bollinger Band, or is this area going to act as a base in the market? There's no way to know because today shocked the market when the European Central Bank action just took us all by surprise. So let's see where it carries us one way or the other. I want to remind you about our research. If you haven't seen the Linn Group research, you should if you're a futures trader. Our company writes on all these different markets, and I think you'll find it's information meant for futures traders. We're not writing for people that are basically trading the ETFs, the stock market, others. We're writing about these markets meant for the futures markets. Admittedly, I cover ETFs in my own research to a degree, but as you can see, these are what we do. And no, you don't have to get all this information. You pick and choose what you want so you can see what you get. Now, our clients get this, and it's absolutely free to them if they have a trading account. You probably don't. Why not take a trial to it for free, see what we offer? Give us a call. You can go to our website. You'll see our carousel of free offers right on the front page. You can click up here to get there easier via YouTube. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.